Dear subscribers, as you know, we shared many information for you, and we are studying very hard to find current news for you. However, I cannot use this channel for future. Please follow our new channel called as Daily News Report and watch our video to support us. Link in description. Also, you can reach the video we shared on Daily News Report by clicking on the top right button. We highly recommend watching, subscribing, and sharing. We will continue to share some news on this channel, but we take precautions against some situations for future. Thank you for supporting us.
On Wall Street, and here's your last hint. He's the chairman of Rogers Holdings. The great Jim Rogers is with us today. How are you doing today, Jim?
Delighted. We should stop now, Michael. Well, I'm ahead. Whatever I say cannot be as good as that.
Oh, perfect. So, Jim, what I want to start with this today is that, central banks have a long history that's replete with blowing up asset bubbles and then popping them with devastating consequences, absolutely devastating consequences. And coming out of the Great Recession, central banks counterfeited, I'll use the word counterfeited, $15 trillion worth of money to buy sovereign debt in order to make governments seem solvent. And I started an inflation-deflation portfolio because I knew governments were going to default on this debt. But now we're being told that central banks can unwind their massive quantitative easings and their balance sheets with impunity. As a matter of fact, Janet Yellen said it was going to be like watching paint dry. Tell me why this time around is going to be different, if you think it is, that this is the first time in history central banks can escape their massive quantitative easing, which they've never done before in history. The first time in history they've done this. Why is this time going to be different for central bankers?
Michael, it's a really good story, isn't it? My goodness, it's a fantastic story. I hope you believe it, because I certainly don't. If you want to believe in the tooth fairy, maybe that's how they're going to do it. The tooth fairy is going to save us all. Michael, since 2008, government debt around the world has doubled. Now, everybody has talked about austerity and how we're going to cut back spending and pay off the debt, et cetera, but the debt has doubled. The debt at the American Central Bank has gone up 5 or 6 times in just 9 years. This has never happened before in recorded history, as you point out. Never, ever have interest rates been this low, and they say it's all going to be okay. You better call the tooth fairy, and you better watch Pinto Portfolio Strategies so that you survive.
But we're one of the few people on Wall Street that actually get this. I mean, everybody else seems completely sanguine with the fact that the Fed could not only raise interest rates 3 or 4 times per annum, but also drain their balance sheet. Their balance sheet used to be $800 billion prior to the Great Recession, $4.5 trillion it exploded to. And forget about the ECB and the Bank of Japan. And what the hell they're up to, I have no idea. They'll never be able to drain their balance sheet. But everybody seems to be completely convinced that the market could just go along on all-time highs, trading at 26 times trailing earnings, 150% market cap to GDP, and somehow, nothing bad is going to happen this time around. I'm just floored about the whole situation. Maybe that's why you were recently quoted as saying that the next bear market will be the worst in our lifetimes. Can you just briefly expound on that?
Well, first of all, I don't find it such a strange statement. We've had bear markets every few years since the beginning of time all over the world, and we will have another one. Janet Yellen also says we will not have another bear market, and we will not have any more financial difficulties. So, again, Janet Yellen and other central banks have a different view from me. All I said was that when we have the next one, and we will have one, it's going to be worse than we've ever seen. 2008 was awfully bad, Michael, as you remember. Well, since then, the debt has gone through the roof. I've already said just government debt alone has doubled since 2008. So it has to be the worst in our lifetime. Now, it's not so bad if you're ready for it and you're survived. I mean, if you watch Pinto Portfolio Strategies and you know what's going on, you're knowledgeable, then you'll get worried, and then you'll get prepared. But Michael, you understated how bad it is. The Japanese,
I did.
The Japanese central banks prints huge amounts of money every day and buys bonds. They own 40% of the Japanese bond market. They also buy ETFs. They control the Japanese ETF market. They're constantly buying Japanese ETFs. And by the way, I own Japanese ETFs because of that, because I know they have enough money and can print as much money as they want to. Now, in Switzerland, which was always the paragon of virtue, Swiss franc was backed by gold, backed by integrity, backed by everything. Now, the Swiss central bank every day prints money and buys Amazon and Google. They buy the FANGs in America. So the Swiss franc is now backed by Google. You know, when this all comes to an end, not especially, but when people realize that the Swiss franc is now backed by Google, and you're going to see Amazon and that lot going down a lot in the bear market, as they always do, what's going to happen to the Swiss franc? So, you're just getting started. You don't know how bad this is going to be.
You know, Jim, according to my calculations, you know, the deficit in 2007 was 1.1% of GDP. According to my calculations, the deficits going forward, fiscal 2018, 2019, if you add in central bank sales, are going to rise to 8 to 9% of GDP. These annual deficits, 8 or 9%. I mean, this is just disgraceful and unheard of in peacetime. I wanted to ask you this. I have my own opinion. My own opinion, really, this is, I'm interviewing you. I think yields are going way higher than 4% on the benchmark. But where do you think yields are headed to on the benchmark 10-year Treasury? Give me a guess as to when you think that's going to happen. And what's the trigger there that sets the stock market off, takes it down maybe, further past 10% into a bear market territory?
Well, Michael, I'm not a very good market timer, or I'm not a very good short-term trader, but I will tell you that interest rate, in America, we've had very long cycles in the bond market. The bond market started a bull market, or a bear, depending on how you look, interest rates or bond prices, started a bear market in 1946, which ended in 1981. You can tell that that's 35 years. Then in 1981, we started a bull market in bonds. Well, that one has gone on for 36 years now, 37 years. So bull markets in America, anyway, have had a habit of being very long. So I would just suggest to you it's already started turning, and the interest rates are going to go up for a long, long time. If I told you how high, you would hang up. You would stop listening to me. They've never been this low in world history, anywhere in the world. We've never seen interest rates like this, and world history's been around for a few thousand years. So when the next bear market comes in bonds, it's going to be a doozy.
Well, give me an idea. What do you think they can go to 3%? I mean, I think they go to 3% before February.
In September of 1981, the long-term bond in America was 15.5%. 15.5% was a long-term. I was the Treasury. I'm not talking about junk bonds. I'm talking about United States Treasuries were 15.5% in September of 1981. You take it from there, okay?
Okay. I want to talk a little bit about the massive influx that we've had into passive
By the way,
ETFs.
one other thing. In 1981, America was a creditor nation. Now, it was a creditor nation. Now, we're the largest debtor nation in the history of the world, and as you aptly point out, the debt is getting higher every day, every hour.
So we shouldn't be very sanguine when we hear CNBC pundits come on and say, it's only 2.9% on the 10-year, and what do we have to worry about? Maybe they go to 3%, or maybe 3.5% for the next few years, but that's just a sign of a bull market. I don't believe that. I can glean from what you're saying. Interest rates can go a hell of a lot higher from here, maybe into double digits, and I'm kind of on your side on that front. You talked a little bit before.
I didn't know anybody watched CNBC. I thought they had like 30. I thought they did 30,000 viewers or something.
Well, I just did an interview when I have 60,000 hits. So I think you're going to get more hits on this show times 2 or 3 than you'll ever get on CNBC. But you talked about ETFs before. And I sort of wanted to ask you this question about the inverse volatility trade that kind of blew up huge a few weeks ago. Everybody was piled into these inverse vol trades. They figured, hey, the market can never go down because we're just front-running central bank bids. And all of a sudden, people got spooked, and volatility spiked 100%, and inverse vol went to 0. And people were piled into these ETFs and ETNs. Well, there's been a massive influx into ETFs, and these ETFs kind of all own the same few stocks. Apple's in this ETF, and Apple's in that ETF, and everybody's in these passive ETFs. And when the poop hits the fan and everybody tries to get out of these ETFs at the same time and the same stocks, what's going to happen, Jim? What do you think? I know you have some thoughts on it.
Well, you just said it, you know, as well as I do. Everybody owns the same thing. It's even more narrowly focused now than in previous bull markets because it's so easy. Listen, I'm as lazy as anybody else. I own ETFs. I told you, I own Japanese ETFs because of we all are, not everybody's lazy, but I am, and a lot of people are. And so you buy the ETF. So when it goes the other way and we all say, oh my gosh, I better sell, we're all going to sell the same thing, which means it's going to be a very, very concentrated. If you own stocks that are not in an ETF, please send me an email because I want to know what they are. That's what the opportunities are. Those are the stocks that haven't been going through the roof. They're still cheap, but they're not going to get crushed next time around either. So maybe that's where, if I weren't so lazy, that's what I should be doing, looking for the stocks that are not in the ETFs.
You imagine when this market turns and everybody has to sell Facebook and Apple and Netflix and Google over and over again as the ETF gets redeemed, and then they have to redeem the underlying equities in the ETF, and that causes them to go down further. Oh boy, I'm telling you, this is going to be a wild ride, Jim. Unfortunately, but we're here to warn people, not here to scare people. Like Cassandra's, markets do go down, and it's going to go down again. I want to switch down to.
Let me interrupt again. I said before, we're going to have the worst bear market in my lifetime, and I'm older than you. I've seen some bear markets, so it's going to be a mess for the reasons you just enunciated.
I'm looking at junk bond yields. That's where I think the epicenter of the next crisis is going to be. Junk bond yields are about 5.5%. If you take interest rates to 0% and you have some $14-15 trillion worth of sovereign bonds having a negative yield around the world, European junk bonds were yielding less than treasuries, and even some corporations, investment-grade corporations in Europe, had a negative yield. And people were scampering all around the world looking for yield. And so they found a home in junk bond ETFs, 5.5%. The 10-year note went from, in July 2016, went from 1.4%. If it goes just to 4.4%, these people who are invested in treasuries are going to lose about a quarter of their value. 25% of their value gets wiped away. And if the treasury goes to 4.5%, you and I just agreed that could be a floor rather than a ceiling. The junk bonds aren't going to yield 5.5%. There's going to be a rush out the door of these junk bond, collateralized loan obligations, leveraged loans. And when that happens, the economy is going to suffer. People are going to get laid off. What are your thoughts on that? Am I off the wall and thinking that the junk bond market is just an accident waiting to happen?
Well, I hope you're not. I'm short junk bonds. I would agree with you. The spreads, the yield spreads between junk bonds and AAA, whatever that is now, is very, very narrow. Never been this narrow. So if and when interest rates go higher, and they've already started, junk bonds are going to get killed. But also, Michael, and that may be where it all starts the next time around. It also may well start with states and municipalities, because there are many, many, many bankrupt cities, not just in the U.S. Half of Germany is bankrupt, the cities in Germany.
Wow.
And Germany is a paragon of virtue. We all say, the Germans do it right. They keep their finances in order like the Swiss used to. Well, Illinois is bankrupt. Hartford's bankrupt, especially if interest rates start going higher. So you're going to see a lot of turmoil in a lot of bond markets.
The BIS says that 10% of corporations don't have the cash flow, the earnings, to pay interest expenses. 10%. And the IMF says 22% of corporations can go bankrupt the next time yields increase. When yields rise even a little bit. That brings me in mind to the real estate market, Jim. Existing home sales were down 4.3% year over year. And we just happened, it's just the tip of the iceberg we've seen as far as yields are concerned. The 10 years, 2.9%, Jim. What is the 30 year? 3.1%? It's nothing. It's nothing compared to what's to come. Do you think we could once again have distress in the real estate market?
I think. Suppose interest rates go to 6%, which historically is not so bad. Historically, is not, the end of the world. So, no, of course, many, many places are going to get killed in real estate. Now, there are going to be places that I'm sure are going to do very well. Go to the markets that nobody's looking at. Go to North Korea or Vietnam, and there are plenty of places where real estate is still very cheap. You and I cannot invest in North Korea, but other people can. There are plenty of places where real estate is still reasonable. Not in most of America. I live in Singapore. Certainly not in Singapore. I would certainly not suggest buying property in many Asian cities.
Well, there's parts of the California market I wouldn't touch either at this juncture either. But what are your views on precious metals here and the value of the U.S. dollar, Jim?
Well, I own some gold. Funny you should ask. I happen to have some sitting around, and some silver sitting right here on my desk. Not for you, by the way. I own it, but I haven't bought any serious gold and silver since 2010. I haven't sold any. I own a lot. I'm waiting for another opportunity if and when there's serious turmoil. Gold and silver usually go down a lot too, at least at first. And if and when that happens, I hope I'm smart enough to buy a lot more gold and a lot more silver. Before this is over, Michael, people are going to lose confidence in governments. People are going to lose confidence in money. And throughout history, they buy gold and silver. Whether they should or not is irrelevant. That's what they've always done, and they're going to do it again. In my view, gold certainly get very overpriced, might turn into a bubble this time around or next time because the turmoil is going to be so bad. So no, I'm not buying now, but I got plenty. I even have some right here on my desk. Quite like this.
I'm right with you, Jim. I don't have it to show on camera right now, but I'm right with you. I think gold's going to absolutely skyrocket after the next recession ensues. If they have to now reverse QT, go back into QE, launch universal basic income, negative nominal interest rates, helicopter money. I mean, that's all those things they're going to have to do to bail out the insolvent pension plans that we have, both public and private. Gold is just, going to be gold and silver, platinum, huge buys in my opinion. After the next recession, though, I mean, right now I'm underweight in my portfolio, maybe about 10%. But you're right, though. Dollar should fall, and nominal interest rates and real interest rates should tank with the next recession. So I have to ask you this. I want your opinion on this. Donald Trump comes into office. First of all, candidate Trump was going to pay down the national debt. I don't think he's going to do that in 8 years, or even if he had 80 years, I don't think he'd be able to do it. But he does say that he can grow the economy by 3 or 4% due to his tax cuts, his corporate tax cuts. Do you think that Mr. Trump can engender that kind of growth and save the U.S. economy?
Well, it's a wonderful story. We've been discussing some great fairy tales here today, Michael. No, it's a great story, and I hope I'm an American taxpayer, American citizen, just an American voter, just like you. So I certainly hope he pulls it off. But we've heard this story many, many, many times in America, even in my lifetime and before. Not just America, all politicians all over the world have said this sort of thing. And you know the rest of the story. It has never, ever happened, except sometimes when there's a serious crisis, such as losing a war or depression or, absolute chaos. It happens. The debt goes down. But the way to get from here to those kind of stories is not a lot of fun.
Yeah, I never thought they would run 8% deficit to GDP ratios in peace times. And we're only at 103% of debt to GDP. It's just unheard of. I want to leave.
Go ahead.
No, go, please.
I was going to say, America is the largest debtor nation in the history of the world. It's never happened before. And maybe that's Mr. Trump's idea of making America great again. We're going to be number one debtor in the whole history of the world forever. I don't know. I don't understand. I know some of the stuff he's doing is certainly making China great again. It's not helping America. It's making China great. So maybe he has a secret plan, like Mr. Nixon had a secret plan. You know what?
Yeah.
There.
Yeah. So I want to leave you with this one, not really even a question, just a thought. A former Goldman Sachs banker was quoted in Bloomberg saying, "Jim has been talking about severe corrections since I started in the business 30 years ago. I'm sure he'll be right at some point." Now, this really burned my gut. I got to tell you, Jim, first of all, I don't know where this person was in the year 2000. I don't know where he was in 2008, but you have been correct. You have been right. And I think you are going to be right in a big way very, very soon. Not because I want this to happen. First of all, I hope and pray, Jim, that this country, this great country that I live in, the United States, returns and embraces free markets once again. You know, we had that opportunity in 2008 to do so, and instead of doing just QE1, we extended it all the way out to 2015 and took the balance sheet $4.5 trillion and deformed and defaced and warped every asset on the planet. Because you know what we did, dragged European Central Bank, the ECB, and the BOJ into the same thing, and the Bank of England, and everybody was doing the same thing. So it's my hope and prayer that we return to free markets as soon as possible. But you are going to be right. I want to give you just a chance to say, you know, you are correct. You are a great man. You predicted a lot of this chaos, just like I was a buffoon and laughed at on CNBC all throughout 2006, 2007. I was a scapegoat there. They laughed at me, and I was warning about the fact that the housing crisis would cause an economic collapse, not only in the United States, but around the world. I was proven right. I never dreamed that we would be in the situation where we are today, where central banks dominate the entire global system. So I'm going to leave you with a chance just to defend yourself to this person, this former Goldman Sachs
I don't
banker.
need to defend myself from some Goldman Sachs hack like that. I mean, he obviously does selective news, whatever he has. Fake news, you've heard, he probably invented fake news. You know, if he started 30 years ago, and maybe he remembers how I predicted the 1987 collapse. But it doesn't matter. I've certainly made mistakes, but I've had more than one correct thing in the past 30 years, he said. And actually, in the past 50 years, I've had it right more than once. But Michael, I've made plenty of mistakes. You want to hear about my first wife? Oh, what a mistake that was. Oh, for goodness sake.